Ladies and gentlemen, good day and welcome to the Kewal Kiran Clothing Limited Q4 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Before we begin, a brief disclaimer. The presentation which Kewal Kiran Clothing Limited has uploaded on the stock exchange and their website, including the discussions during this call, contains or may contain certain forward-looking statements concerning Kewal Kiran Clothing Limited business prospects and profitability, which are subject to several risks and uncertainties, and the actual result could materially differ from those in such forward-looking statements. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. I now hand the conference over to Mr. Hemant Jain, Joint MD, Kewal Kiran Clothing. Thank you, and over to you, sir.
Good afternoon, everyone, and thank you for taking the time to join us today. Welcome to Kewal Kiran Clothing Limited Q4 and FY26 earnings call. I am joining by Mr. Pankaj Jain, President Retail, and Marathon Capital, our investor relations advisor. We are pleased to report a strong close to FY26 with Q4 marking yet another quarter of double-digit sales growth and taking full year growth of 20.9%. This performance is well ahead of the average growth rate envisaged in Vision 2028 and validates our brand-wise differentiated strategy. Let me walk you through some of the key highlights for the quarters and financial years. Consolidated revenue for Q4 FY26 stood at 325 crores, up by 12.4% year-on-year, and for FY26 stood at 1212 crores, led by strong growth in the both volumes and value. April volume growth on a consolidated basis saw an encouraging growth of 16% year-on-year, driven by strong design capabilities and sustained consumer demand for our product. Coming to our operational performance. Our performance reflects the scalability, resilience, and execution strength of our operating model, driven by disciplined execution of focused growth strategy across brand and channel. Strong consumer traction led by our fashion-forward, design-led product portfolio. Agility in navigating a competitive landscape while sustaining market shares and profitability. Some notable operational highlights across our brand. First, Killer continued its sustained growth journey with double-digit sales growth in FY26 and now operated 457 EBOs. The SSG for Q4 26 is 6.8% and for the year FY26 is 9.4%. Cross delivered robust sales performance and growth in EBITDA margins at par overall KKSL margin profile. On track to evolve a significant player in women's casual wear market. Started getting good traction in MBOs, export market, and expanded EBOs network to 28. Focus now towards further improvement in working capital cycle. Junior Killer posted high sales growth in FY26, validating our focused entry into kids wear. Backed by disciplined execution, the brand is gaining strong traction. Lawman, with this strategic repositioning toward D2C model, the brand had started showing positive traction and consumer acceptance, resulting in robust sales growth in FY26 and now operated 90 EBOs. Integrity recorded notable growth in both Q4 and FY26 year-on-year, driven by a renewed focus and targeted brand building efforts. On the profitability front, EBITDA came in at 238 crores for FY26 and 62 crores for Q4 FY26, reflecting a staggering 25% and 18% growth year-on-year respectively. EBITDA margin expanded upward of 19% for both the quarter and financial years, driven by efficient operational performance, surpassing our guided range of 17 to 18%. Our execution-led operational discipline enabled us to grow at scale while protecting profitability, resulting in a strong EBITDA margin of 19.6% for FY26. On the channel of sales front, our EBO, large format stores, MBO, and online channel reported healthy double-digit growth in FY26, validating the effectiveness of our go-to-market strategy. Revenue grew 16% year-on-year in retail and 8% year-on-year in non-retail Q4 FY26. For FY26, retail grew 24% and non-retail grew 17% year-on-year, underscoring consistent broad-based momentum across formats. In line with our strategy to expand our brand footprint, we added net 57 EBOs in FY26, taking our total to 666 stores as on March 31st, 2026. Coming to our outlook and strategy. The robust performance in FY26, particularly the contribution from cross-casual, give us the confidence to raise our growth ambitions backed by an inorganic acquisition strategy. We continue to achieve the Vision 2028. However, we aim to further accelerate the growth target from 15% CAGR to 20% CAGR in the next 3 years, and it's expected to be meaningfully supported by a well-defined acquisition framework. While acquisitions may not materialize uniformly each year, our 3-year strategic roadmap is designed to deliver this accelerated growth trajectory. Backed by our core principle of stability, sustainability, and scalability, we remain confident in our ability to achieve these ambitions. With that, I would now like to open the floor for questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and then one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, to register for a question, please press star and then one. Your first question comes from Shubham Jain from Countercyclical. Please go ahead.
Hello.
Good afternoon.
Good afternoon. Thanks for the opportunity. I just have 2 quick questions. So firstly, on the monetization side of our land in Goregaon, any update on that?
We are still under negotiations for that.
Okay. And what is your expectation? When can we complete that part?
But as of now, the decision is still standstill. We can update this decision on a quarter-to-quarter basis on every Concall.
Okay, sir. Secondly, sir, on the acquisition that we had done in Cross, 50% stake, are we planning to increase that stake going forward?
So there is nothing changed for first 5 years period. After there can be some.
And any other acquisitions that you have been planning in other segments as form of inorganic growth?
We are open for opportunities and we are also looking for some.
Okay, sir. Just lastly, you have raised your guidance from 10-15% to 20+. Where are you particularly expecting that growth to be coming from?
So, what I'm trying to say is that, okay, our organically, our growth, we still say that it should be around 15 to 18%. The additional vacuum of close to around 5% shall be covered by an inorganic acquisition.
Okay, sir. Thank you. I'll get back into the queue.
Thank you. Before we take the next question, a reminder to everyone, you may press star and then one to ask a question. The next question comes from the line of Rushabh Shah from Bugle Rock PMS. Please go ahead.
Thanks for the opportunity, sir. Sir, a few calls back, you have said that you see significant export potential for our flagship brands like Killer, Cross, especially in markets with a strong youth. So just wanted to know wanted to have to look out for those markets. Which are those markets? What is the export potential? And any internal targets you have to reach in exports for next 5 years?
The exports for KKCL, the exports doesn't actually contribute significantly. However, most of the countries which they export to, including Cross, is Middle East and Saudi. Okay, you have known the case scenario that over the last 3 months, it has been disturbed, and that's the reason. Exports has been little bit disturbed. Going to the article which we said right now, that all the channels have been growing, and we think that the exports going to remain constant or may degrow for the next year.
Okay. So my second question is, KKCL has also launched the athleisure segment. So how has that segment grown for us?
So it's a part of the entire brand. Okay, some categories move upward, some categories move over. We are not treating it as a separate format.
Yeah. So, sir, what do you think about this segment? Can this segment going ahead in the next, let's say, 4 to 5 years, can be as big as the jeans segment we have?
Too early to speak about it. As I said, that we are treating it as a category only, or as one of the category sales for us. Okay, we are not treating it as a separate or a sub brand.
Okay. So my next question is, I wanted to know from your vision perspective. And
little bit loud, please.
Yeah, sir, I wanted to know more from your vision perspective. And this question is not for just, let's say, 2 to 3 years, but a long-term thought process. The question is that newer brands or categories like Killer Junior, Cross, and also the older ones like Lawman, Integrity, do you think that these can become as big as the Killer brand? And like any steps we have taken, we can see them as a huge brand like Killer Jeans over the coming years?
See, every brand was launched with a separate mindset, separate price bracket, and a separate TG. Okay, so definitely we had some problems for some of the brands. Okay, we have re-strategized our strategy and we have started seeing attraction towards it. And I definitely feel that all the such brands have that potential to go where Killer is as of today.
Okay, fine, sir. Thank you. I'll get back in this.
Thank you. The next question comes from the line of Arpan Rathod from Insight Advisory. Please go ahead.
Good afternoon. Congratulations on a great set of numbers.
Thank you.
And more encouraging is the revision and guidance upward, even considering the current market volatility. So my first question is emanating from that only. What is the impact of war on us? Obviously, we are not too much in exports, but the raw material prices have increased substantially across commodities. So what is the impact? Are we able to pass on in terms of revision in price, or are we looking at revision in channel pricing?
ऐसा है कि जैसे जब आपने ये बताया कि वॉर का सिचुएशन है और अभी कभी तक किसी को पता नहीं कि वॉर कितने दिन चलेगा, क्या होगा, क्या सिचुएशन होगी, ऑयल फैक्टर्स पे प्राइस क्या आएगा या कॉटन्स के प्राइसेस में क्या आएगा. तो अभी तक तो हमारा ये था कि वी डोंट वांट टू लूज द रेवेन्यू. सो मार्केट शेयर हमारे को लूज नहीं होना चाहिए. तो हो सकता है कुछ परसेंटेज, सम परसेंटेज विल टेक हिट इन द प्रॉफिट और सम परसेंटेज वी विल पास ऑन टू द कंज्यूमर. वी डोंट नो एज सच. तो ऐसा है कि अभी तक तो हमारे को इतना इम्पैक्ट आया नहीं है. आगे क्या होगा नोबडी नोज. तो डे टू डे सिचुएशन में क्या बदलाव आता है वो हिसाब से हम लोग भी अपने डिसीजन चेंज करेंगे. बट यस, इन फ्यूचर ये हो सकता है कि कुछ परसेंटेज कंपनी अपने पे लेकर कुछ परसेंटेज पास ऑन होगी. अभी तक ऐसा है कि अभी तक हमारा थ्योरी ये है कि वी डोंट वांट टू लॉस द रेवेन्यू. हमारा मेजर फोकस इज रेवेन्यू. अगर 1-8%, 2% अगर हिट भी लेना पड़े तो कंपनी इज रेडी टू टेक दैट काइंड ऑफ हिट.
That's good to hear. Sir, any color on the working capital?
जैसे कैसे जस्ट मैं एक बात कर रहा था, मुझे नहीं बोलना चाहिए किसी और कंपनियों के बारे में, लेकिन नॉर्मली क्या होता है कि जैसे हमारी कंपनी कैश रिच है, हो सकता है कुछ एडवांटेजेस हमको मिले टू बाइंग कैश एंड एवरी, मतलब कैश वॉल्यूम वैल्यू और वॉल्यूम्स के ऊपर हमको कुछ बेनिफिट हो सकता है. तो जितना इम्पैक्ट बाकी अदर कंपनियों पे आएगा उतना इम्पैक्ट हमारे पास नहीं आएगा. तो दैट, लेकिन नोबडी नोज कि क्या सिचुएशन होने वाली है. तो हमारा एकदम एक बहुत क्लियर है कि भाई डे टू डे देखेंगे और उसके बाद डिसीजन लेंगे. बट ये है कि बिजनेस लॉस नहीं होना चाहिए. यस सर, प्लीज. हेलो.
Yes, sir. The line for the current participant has dropped from the queue. We'll move on to the next question. The next question comes from the line of Lakshmi Narayanan KG from Tunga Investments. Please go ahead.
Thank you. Thanks. Good results, especially on the working capital front. We have done pretty well, and I think we have sustained the operating margins also, or even enhanced it a couple of basis points. So, a few questions. From a sales of cross brand, how much that actually contributed to the growth for the full year? I think this full year is the first financial year with cross both in the baseline as well as towards the end of FY26. That is my first question.
Growth for cross has been in upwards of more than 20%.
And how much cross contributes now? Is it compared to last year to this year?
So, we generally give the numbers on a console basis scenario. We don't give brand-wise numbers.
Got it. And in terms of because there has been some due to GST, there has been some pricing revisions, and is there any stock level loss we have to take, or is that entire the pre-GST stock has been is out of the system? Can you just tell me how that actually got happened?
After the GST changes, which was happened on 22nd of September, okay, for the third quarter, the company had to pass on the entire GST benefit to the consumer. Okay, going forward, or maybe for FY26, we feel that the impact of GST is neutral for the company. For some brands it's more, and from some brands it's less.
Sorry, and any price increases we have taken in the last few months?
हमने अभी तक कोई प्राइस हाइक नहीं किया है. सेम प्राइसेस पे हम लोग ऑपरेट करते हैं. थोड़ा बहुत प्रोडक्ट में मिक्स लेना चेंज होता है. दैट इज अप टू सीजन ऑफ कोर्स, बट हमने कोई प्राइस हाइक नहीं किया है. सो वी हैव अ रूम कि इन फ्यूचर अगर थोड़ा बहुत भी अगर प्राइस अगर हाइक करना पड़े तो वी हैव दैट रूम.
And the e-commerce channel, is it growing ahead of your growth, or is it in line with your company's growth?
It's in line with the company.
Okay. And in terms of full price sales, can you just give a sense of how much it was for the menswear and the women's wear? Because usually they're around 65%.
Full price sales is close to around 60%.
Okay. And when you started the year and ended the year, what are the areas which actually did better than what you anticipated for FY26, and what are the areas which did not do well as per your expectations for FY26?
ऐसा है कि हमारा जो मेजर फोकस था इज ऑन द वेस्ट, कि ईस्ट वी आर ऑलरेडी वेरी मच हमारा बहुत अच्छी तरह से उसमें हो गया है, तो नाउ वी आर फोकसिंग ऑन द वेस्ट एंड वी आर हैविंग अ वेरी गुड रिजल्ट. यस, जितना हमको नॉर्थ में हमको फोकस करना था उतना वो हिसाब से हमको उतना बेनिफिट नहीं मिला, बट यस वेस्ट एंड साउथ वी आर मेजरली फोकस ऑन दिस ईयर ऑल्सो. तो एक कैसा होता है कि ये थोड़ा बहुत आगे पीछे होना ही है कि आप जितना एक्सपेक्ट करो हर 100% आप फुलफिल नहीं कर सकते हो, बट आप यहाँ नहीं तो वहां पे कहीं भी करके एंड ऑफ द डे वी हैव टू अचीव दैट बिजनेस टारगेट. मेजर फोकस ये होता है कि बिजनेस कहीं से भी मिले आपको बिजनेस टारगेट पहले कंप्लीट करना चाहिए. यस, वी आर फोकसिंग ऑन टेरिटरी, बट वेस्ट में हमको अच्छा बेनिफिट मिला, नॉर्थ में हमको उतना एक्सपेक्टेशन से हिसाब से नहीं मिला.
Got it. Sir, and in the other segment, which includes innerwear and perfume, glasses, and so many other things, right? So that has actually also grown ahead of our overall growth, I believe, right? So can you just explain as to within that which segment is growing in the others faster?
Our major focus is on the apparel business. All the accessories business is impulse buying. तो हम लोग उस पर बहुत ज्यादा भी फोकस कर नहीं रहे. Our major focus is on the apparel side, like jeans, shirt, trouser, t-shirt, winter wear jackets, sweatshirt, sweaters. So our major focus is not. We are not major focusing on the innerwear or some socks or some of the accessories business. Yes, we do that, but because the brand is all about the lifestyle, we have to keep all these things. But our major focus is on the apparel.
Okay. Thank you, sir. And I'll come back in queue.
Thank you. The next question comes from Manoj Thakur from Motilal Oswal. Please go ahead.
Hello. Good afternoon and congratulations on great set of numbers,
Thank
both on
you.
the operational front and as well as on the revenue growth. So I have just had a couple of questions on my side. So regarding our development and progression of Cross, on the margin front, how we were back, like about 1 year back, and how we are doing now. What has been our focus in creating the additional EBITDA margin that we can get from Cross?
क्या होता है, देखिए हमारा बहुत ऐसा ड्रास्टिकली अगर आप देखेंगे तो बहुत ज्यादा प्रॉफिट में बदलाव नहीं हुआ है, बिकॉज ऑफ द जब जैसे जैसे आपका कंपनी का टर्नओवर बढ़ता है तो आपकी फिक्स कॉस्ट आपकी नीचे आ जाती है. एक वो बेनिफिट वाला और सम परसेंटेज हो सकता है फॉर द टेम्पररी बेसिस पे कि जीएसटी का एक बेनिफिट पास ऑन हुआ हुआ है. तो इट्स ऑल मिक्स.
Okay.
और ये तो हमको तो खुश होना चाहिए, आप यार आप लोगों को ज्यादा खुश होना चाहिए कि अच्छा प्रॉफिट आ रहा था, इज बेटर.
Yes. Great set of numbers, as I said. Also, on a store guidance level, what are we targeting for next couple of quarters and full year?
Full year should be around 50 to 70 odd stores.
These are all majorly EBOs?
All EBOs, huh? We're talking
All
EBOs
EBOs.
only.
Yes. Okay, sir. I'll just come back in the queue for further questions.
Sure.
Thank you. Participants, you may press star and then 1 to ask a question. The next question comes from the line of Arpan Rathore from Inside Advisory. Please go ahead.
Thank you for taking my call. My continuing from the conversation wherein I dropped in, can you give some sense on the working capital?
Can you be
Going
little
forward.
louder and clearer?
Okay. My question is regarding the working capital. What are the short-term and long-term working capital days which we are looking at? Hello?
Okay, the working capital should stay anywhere between a limit of 130 to 140 odd days.
And this is same for Cross and the company on a standalone basis.
This is the overall limit structure. Okay, Cross it will be little higher.
Any specific reason?
Okay, most of its business is skewed towards LFS and retail. That is the reason.
Okay.
Secondly, we are the manufacturing company. We are not the vendor-based company. तो आपको ये भी सोचना पड़ेगा कि जो हमारे लिए हम लोग जो मैन्युफैक्चरिंग करने तो there is a WIP. So when we are manufacturing, हमारे 50 to 60 days हमारे को मैन्युफैक्चरिंग में चले जाते हैं.
Very true.
तो आपको दोनों कंपैरिजन करके करना आपको देखना चाहिए कि एक तो मैन्युफैक्चरिंग डेज एंड दैट अदर डेज तो सेलिंग डेज. तो आप अगर दोनों को कंबाइन करेंगे 130, 140 और डेज होना ही होना है सर.
Right. So again, my second question is linked to that only. Cross currently everything is outsourced in terms of manufacturing. This is correct, right?
Yeah.
So, and considering that we have on a standalone basis enough capacities wherein we can actually absorb that manufacturing also. Any plan there?
That's not the plan for the immediate future also. Okay, currently KKCL is only operating at 100% efficiency structure.
Okay. So any CapEx which, considering that, the growth targets have been revised upwards, obviously with acquisitions, but then also on a standalone basis, you'll need some capacity expansions.
Okay, not much. Okay, as we said that, close to around 30 to 35 crores is the requirement for CapEx. That includes the front end as well as the back end on a year-on-year basis.
Sure. Secondly, in the opening remarks, you had made a pointed remark on growth alongside acquisitions. So any, plan which have been drawn up? I know it's very difficult to point at any specific company currently, but which segment or, like we did Cross. So which would be the other segment which we will be looking at? Any broad strategies around that? Obviously, the name, value, everything can't be discussed currently, but broad parameters just for our understanding.
So more importantly, we are right now open for all the company structure. We just define whether we can add to the synergies, and we look it from an ROC perspective whether that synergy and ROC can deliver. Okay, we are open for our competing categories also, as well as premium as well as the value segment. We are even open for any gender specific.
Okay. Sure, that's it from my side. Thank you and all the best.
Thank you. Thank you.
Thank you. The next question comes from the line of Sahil Doshi from Thinkwise. Please go ahead.
Hello. Good afternoon, sir.
Good afternoon.
Just one on the integrity bit, which we said is done exceedingly well this quarter. And so could you just talk a little more on integrity, and for FY27 with the pivot in the brand strategy, can we start expecting better numbers from that?
Yep. We have changed the price strategy for that, and we have started seeing interesting results. We have also started gaining counters on the multi-brand as well as change store formats. We feel the growth will be in line as what we are talking about the company.
Okay, so meaning the transition in terms of modern trade and number of counters, are we complete in terms of the entire plan?
No, there is huge vacuum left yet.
Okay, understood. Okay, so additionally, basically these all new pivots from Lawman and integrity should start contributing higher
from first quarter of this year itself.
Okay, so if I had to just correlate, if I see standalone, which is your traditional business, see this quarter maybe it's been 8% kind of growth, and for full year is 13%. So directionally, do we think that this should start picking up at a much higher level?
Should be an upward of 15%.
Should be upwards of 15%. Understood. Sure. And just a follow-on in terms of brand, if I see the segment mix, the bottom and the denim, which typically have higher margins, this quarter we've seen an improvement in terms of the share of bottoms and denims. But if I see in the standalone, at least our gross margins are not showing a similar momentum. So is there some strategic call here, or just wanted to get a sense on this?
So the mix would have also changed because of the change in the price brackets for some of the brands, right?
Okay. Okay. So that is so because I think we used to say 41%-42% gross margin should be normal on an annualized basis. Is that the
Yes.
band which we should get?
Okay, but going forward also, the gross margin should stay anywhere between 41 to a 43 range.
41 to 43. Understood. Right. And just lastly, if we've spoken about a few pivots, and you made a presentation on that. So if you can talk about some of these pivots and where are we in that journey and anything
So
further
Sahil,
if you
this
can.
year actually, okay, there were too many things. Okay, we also had the organic brands which were looking at re-strategizing, which we feel we have been able to do, and that's the reason we have slowed down our pivots in the last quarters. Okay, the pivots would take a scale from this quarter.
Okay. Any particular pivots in particular which will be the focus for 27, FY27?
Too early to answer that, Sahil. Okay, maybe a quarter 2 Concall or a quarter 3 Concall will be able to elaborate on it.
Sure. Understood. Perfect. That's it from my end, and great work on the balance sheet again. Yeah.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and then 1 to ask a question. The next question comes from the line of Manoj Thakur from Motilal Oswal. Please go ahead.
Hi, sir. I'm rejoining again. So, one clarification on the movement of other income that we have seen in FY26 Q4. Can you put some light on that? Hello?
Other income.
Yes.
The other income has gone down. If we are talking about the quarter or the full financial year?
This quarter.
Quarter, okay, so it's generally mark to market, and that's the reason it has gone down. And
Okay, so majorly is that. What would be the quantum of the mark to market?
so, if you look at the annualized number, okay, our other income should stay with somewhere between 30 to 35 crores.
Okay. Got it. And also, one more question coming related to Cross. There are any plans to do a further acquisition of the remaining shares?
Not for the first 5 years.
Okay. And in the strategy that we said, then we would do one more inorganic thing. Would that be a 100% full buyout, or how would be the structure, or we can get the details later on?
Okay, we will update you about the companies and after the buyout actually happens.
Okay.
मनोज, वो क्या होता है, इतना जल्दी हम है ना आपको इसके बारे में बता भी नहीं सकते हैं।
Yes,
क्या
yes.
कौन सी कंपनी कैसे क्या डील करते हैं, क्या वैल्यू पे आती है, उसके ऊपर सारा है ना ये रहता है। So I can't say anything right now, क्योंकि if the deal is not happen, बात करके कोई मतलब ही नहीं ना।
Yes. Agreed. Sure. Thank you, and that's it from my side.
Thank you. Participants, you may press star and then 1 to ask a question. The next question comes from Arpan Rathod from Insight Advisory. Please go ahead.
So, one question on the store addition target. How many store company-owned, company-operated stores we are looking to add up in this year?
We are looking at close to around 50 to 70 odd stores net to be added. Okay, generally we try that. Okay, that the proportion stays close to around 15% as compared to 85% franchisee stores. But however, okay, if any good deal structure happens, so that makes I can update you on much quarter-on-quarter basis.
Sure. And the SSG numbers which we have started disclosing, that's a welcome move. And this is would be for company-owned stores only, right?
For total, for all the areas.
Okay. Thank you.
Thank you. Thank you. The next question comes from the line of Madhur Rathi from Counter-Cyclical Investments. Please go ahead.
Sir, firstly, sir, instead of paying dividends, sir, have we thought about doing a share buyback?
It's a company policy, boss. वो में है ना अभी आपके सबको भी और we are already the promoter have 74 point some %. So buyback फिलहाल तो हमारे कोई mind में है नहीं, अगर कुछ रहेगा तो हम आपसे बताएंगे because it's too early to say anything. And we are not even we are thinking on that.
सर डिविडेंड पे जैसे 36% टैक्स लग रहा है और सर अगर यदि बायबैक करेंगे तो उस पर 30% टैक्स ही लगेगा, तो सर एक टैक्स एडवांटेज था, उसी के कारण मैं पूछ रहा था. एंड शेयर होल्डर्स को तो सेम पैसा मिलना है, गवर्नमेंट को कम पैसा मिलेगा. एनीवे सर, और हमारा हाल में पिछले 2-3 साल में सर बहुत ज्यादा वर्किंग कैपिटल हमारा एक्सप्लोड हो गया है, स्पेशली रिसीवेबल्स लगभग 170 करोड़ से 2 साल में हो गए हैं 320 करोड़. तो सर क्या ये वापस मीन रिवर्ट होने की आशा है क्या?
We say that okay, our working capital should stay somewhere between 130 to 140 odd days, and it will stay in that limit only. Okay, the business has also expanded from the base as you are asking for.
Understood, sir. Sir, so for this FY27, sir, what kind of top line are we looking at?
हमने जैसा बताया नहीं कि आपको, जैसे हम अभी भी अगर वर्किंग कर रहे हैं कि जो हमारा एक विजन था कि लास्ट 3 इयर्स में हमने कमिटमेंट किया था कि वी विल अचीव 1500 करोड़, हम उस पर काम कर रहे हैं और हम तो उसको अचीव करेंगे.
As we said in our this console also, okay, the growth strategy organically stays somewhere between 15 to 18% scenario में. However, if we look at any inorganic growth, okay, the growth strategy for a 3-year period stands at 20%.
Sir, CAGR.
CAGR, yeah.
Thank you very much, sir. That's okay.
अगर आप हिस्ट्री अगर देखेंगे ना लास्ट 4-5 साल का, इवन इंक्लूडिंग 2022 से लेकर 2026, वी आर ग्रोइंग बाय 18.6% एंड वी विल मेंटेन दैट.
Sure, sir. Thank you. Thank you very much.
Okay.
Thank you. The next question comes from the line of Naveen Baid from Nuvama Asset Management. Please go ahead.
Thank you. Thank you for the opportunity. Just wanted to check what was the same-store sales growth for the quarter?
I have already updated. The SSG growth for quarter 4 was around 6.8%.
And what was the same-store sales growth for the full year?
9.4.
Okay. Thank you.
Thank you. Participants, you may press star and then 1 to ask a question. A reminder to everyone, if you wish to register for a question, please press star and then 1 now. We have a follow-up question coming from the line of Madhur Rathi from Counter-Cyclical Investments. Please go ahead.
Sir, thank you for the opportunity once again. Sir, where do we see our average selling price moving over the next 2 to 3 years with Cross under our acquisition? Do we expect the jeans, which is a higher ASP product, to scale from the current 50% levels? So how should we look at that?
Just a moment, huh? Category mix. Category mix. Category mix. See, it was a subdued use for denim as a category for last year. Okay, this year we have started seeing that again the momentum has increased for denim. Okay, if that starts happening, definitely we will be able to gain much market share. The brands, most of the brands of KKCL, including Cross, are known for denim wear.
Right. So going forward, either in terms of acquisition or in terms of organic growth, do we see the denim segment increasing as a percent, the category mix? So what it is, 48% currently, can we expect it to move to 60% over the maybe next 2 to 3 years, as well as any acquisition? Yeah.
I would put it like this, okay, 5 years or 7 years down the line, it was in upwards of close to around 60%. We have intended and tried to de-risk the entire category mix and come down to close to around 45 or 48. I think with the retail expansion, all the categories move in the similar percentage structure. So I think it should stay in the similar mix of what it is as of today.
And sir, on the acquisition, sir, so where do we see this acquisition in terms of price point? Will it be a higher ASP price point whenever that happens, or would it be on the similar price point that we are currently present in?
On the value channel, see, for Kewal Kiran, everything is open. We are mostly menswear led, more casual driven, more denim centric. Okay, there is a lot of vacuum on other side aspects, which we feel that KKCL can still synergize and explode. That's one. Secondly, if there is something coming on the denim aspect, we are not even disputing that we should not look at it. So on the price, so KKCL is open on the gender mix, that includes ladies as kids. Okay, on the menswear also, I feel there is more room on the value segment as well as upper premium price bracket.
Right. So nothing concrete as of now.
That's true.
Okay, got it.
सर हमारा जैसे टारगेट है 1500 करोड़ रेवेन्यू FY28 के लिए, तो सर हमने 1200 के ऊपर तो अभी कर लिया है, तो सर फिर तो हमारी 2 साल में टोटल 25%, मतलब कि हार्डली 12-13% ग्रोथ हो रही है पर ईयर फॉर द नेक्स्ट 2 years, जबकि आप
The vision statement was made a year before, okay, where we had projected at close to around 15 to 18%. Okay, we have already delivered at 20%. We are changing a growth strategy for going forward from a 15% to a 20%, where we again say that 15% will be organic, and that 20% will be from any inorganic buyout. Okay, so but it will be in a 3-year period. So 1 year has already lapsed. Okay, maybe in the next 2 year perspective, but if you look at the 3-year CGR, I'll be able to deliver it at 20%.
अंडरस्टूड सर. और एंड सर हमारे जो EBO है दैट इज कंपनी ओन्ड और फ्रेंचाइजी ऑपरेटेड?
It's a mix of both of them.
So what is the breakup?
Generally, right now, I think it should be around 15 to 20% should be COCO and 80% should be franchisee-owned, franchisee operated. But going forward, that mix can change.
Sir, and what is the ballpark capex in one EBO to set up one EBO in terms of capex and working capital?
So overall, as I said, that the capex required should be around 30 to 35 crores on the company level. Okay, that includes the front end as well as COCO stores.
Understood, sir. And sir, what were the exports for the current year? And sir, are we doing white label exports or exporting under our own brand?
Okay, we are exporting most of our brands and it is under our brand name only.
Okay. And sir, finally, sir, what is the rental as a percentage of top line?
We have very less COCO stores as of now, so removing that percentage will be very minuscule.
Okay, understood. Sir, so going forward, sir, the strategy is to do COCO or FOFO?
So again saying, okay, we have explored the Tier 2 and Tier 3 well in advance, where we are able to grab the franchisee operation stores. Okay, going forward, okay, it's a mixed perspective which will be coming, and that mix will keep on changing on a year-on-year basis.
Sir, and between our e-commerce, multi-brand store, EBO, so where is the margin highest, and how much working capital is required in each of these channels?
See, we generally give the bifurcation of retail and non-retail, where retail includes EBO stores and LFS, while all other channels are a part of non-retail. On the channel, the composite mix on the EBITDA margins is almost similar on both the levels. So is the working capital.
Understood, sir. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Hemant Jain for closing comments.
Thank you once again for joining us today. We truly value your continued support and confidence in KKCL journey. Should you have any further questions, please feel free to reach out our investor relations team. Thank you and have a great day ahead. Thank you so much.
Thank you. On behalf of Kewal Kiran Clothing Limited, that concludes this conference. Thank you everyone for joining us, and you may now disconnect your line.